In this section, we're going to run through deductive and computed value, but certainly not at the level of detail that we went into on transaction value. The reason for that is that in the preponderance of cases, it's transaction value that is used. Deductive and computed value gets used, but under some very special circumstances that we'll describe in this brief but important section. Deductive value. Deductive value is used when the transaction value of imported merchandise, identical merchandise, or similar merchandise cannot be ascertained. This first bullet takes us back to the previous section when we started talking about transaction value, where we presented the preferred sequence by CBP to put a value on imported merchandise. The first was transaction value, naturally, of the actual imported merchandise. Then it moved on to identical merchandise or similar merchandise. What we're saying with deductive value is, or better yet, what Customs is saying when using deductive value, is that if transaction value of imported merchandise, identical or similar merchandise cannot be ascertained, go to deductive value. And honestly, in the vast majority of cases, transaction value can be used, because really what we're saying is, if transaction value isn't used, we really don't know what the value of the imported merchandise is. So that by definition would indeed be a unique circumstance in the import world. Second bullet, in the above case, deductive value is the appraisement method to be used at the time the entry summary is filed, the 7501. As a definition, deductive value is the resale price of an imported item in the U.S. less certain deductions. What this is saying is deductive value is what the importer would sell it for in the United States minus certain expenses. Let's look and see what those are. The deductions that can be made from a unit price at the vendor's door overseas are, of course, transportation costs. We talked about that. Insurance costs, marine cargo insurance, basically. Customs duties and or federal taxes paid in the United States on the imported merchandise. Any commissions paid, profit earned, and general expenses incurred in the United States. That is not part of deductive value. And any value of further processing for goods not sold in the same condition as when imported. That's an important distinction to be made as well. Certainly, raw materials going into a manufacturing environment would be an example of this. Let's talk a little bit about computed value. And this is when transaction value of imported merchandise, of identical merchandise, of similar merchandise, and deductive value doesn't work. That takes us to the fairly unique scenario of computed value. Basically, first bullet, summary of what we just said. If customs evaluation cannot be based on the previously discussed methods, computed value is then used. Computed value is different from deductive value in that the former is not based on the post-importation resale price of an item. As we see in our sub-bullet, it is based on the computed value of the purchase value of an item by an importer from a foreign vendor. Essentially trying to figure out what the cost would be. And one can reasonably ask oneself, how could an importer find him or herself in that type of situation where they're importing merchandise and they don't know what it's costing them? It happens. It has to be accounted for. That's where computed value comes in. As a trade tip, and this goes back to the sequence that we spoke of just a moment ago, an importer can request that computed value precede deductive value as a basis of appraisement. And the reason why an importer might do that goes back to the second bullet, because computed value is different from deductive value in that the former is not based on the post-importation resale price of an item. What we're computing is the actual cost of the item before it gets resold in the United States, which from an entered value perspective is much more beneficial, or hopefully more accurate, for the importer. So, the computed value of an imported item is the sum of all of these expenses. This is another difference from deductive value. We're not deducting expenses to get to deductive value. We're summing up expenses. related to the acquisition of goods overseas and payment therefore. First sub-bullet, the cost or value of the materials and the fabrication and any other processing of any kind employed in the production of the imported item. Basically, that's what the vendor does. They go out and get raw materials. They manufacture products. There's an expense associated with that. We have to compute that expense. Second sub-bullet, we also have to compute an amount for profit and general expenses that is a reflection of merchandise of the same class or kind. The profit and general expenses that the overseas vendor would have added to the product to make money. It's not just the cost or value of fabrication. That's just the vendor's cost. What about their profit and any other general expenses? We have to compute that too. Any assist not included in the above-mentioned cost or value of production, and packing costs. One could argue that in spite of the preferred sequence we spoke of from CBP, that computed value might be a little bit more accurate than deductive value. That's an argument that can be made. We are not stating it as a factual statement. Last slide in this section. The amount for the profit and general expenses shall be based on the producer's profit and expenses. We said that already. Unless those amounts are inconsistent with the normal profit and expenses associated with imported merchandise of the same kind or class. Not too high, not too low. Goldilocks syndrome, where the porridge is just right. We don't want to add too much profit and general expense to the computed value because that would inflate our entered value. Conversely, we don't want to add too little because that would undervalue the entered value of our merchandise. As such, sub-bullet, it is then based on usual profit and general expense as determined from sufficient information. That's customs terminology. What sufficient information means is a standard we won't enter into here. We should note, as a last bullet, because VAT, value-added tax, is pervasive outside of the United States, computed value does not include any value-added tax paid in the origin country by the supplier that is refunded upon export. And that happens a lot. In China, it happens for sure that a vendor pays VAT on raw materials that it acquires domestically or internationally. Those raw materials go into production. And to promote exports, the Chinese government allows Chinese vendors to recover their VAT upon proof of export. That doesn't count here, especially when that VAT is refunded upon export. Okay, that will be it on transaction value and computed value. We're going to move on in the next section and get into country of origin marking requirements.